Good afternoon. Today I have a company which is called Sakar Healthcare Ltd. This company is manufacturing pharmaceutical products. It has gained technology transfer and it has been allowed to manufacture and distribute seven oncology products from Accord Healthcare, and it is a sole subsidiary of Intas, manufacturing and distributing various pharmaceutical products in the UK, the emerging markets, and the EU. So, following up on this, Accord Healthcare is a subsidiary of Intas, and Accord Healthcare has provided technology transfer for seven oncology medicines, which Sakar Healthcare would be manufacturing and distributing in various parts of the country. So overall, 5 days you can see the stock is up 0.75%. The stock has gone up a little bit today since the news was shared today, and you can see over the last 1 month it is down 21%, over the last 6 months down 24%, and overall year to date is 21.77%. So incorporated in 2004, it is in the business of manufacturing, research and development of pharmaceutical products. So SHL certified ISO 9001 2015, WHO GMP, CGMP, and the National Drug Authority provides comprehensive healthcare and pharmaceutical products operating in over 50 countries with 292 registered products and 210 more under registration. SHL partners with 70 plus overseas distributors. The company also engages in contract manufacturing for leading domestic brands and direct sales in both the export and domestic markets. Product portfolio: oral liquid, syrup and suspension, liquid injectable vials, mopules EU GMP approved, dry powder injections, oral solid, lyophilized injections by valves, oral solid dosage, active pharmaceutical ingredient, pharmaceutical formulation, generic formulation, global presence approved by NDA of Uganda, Kenya, Yemen, Ethiopia, Congo, Ghana, Zimbabwe, Cambodia, Vietnam, Malawi, Namibia, Nigeria, Cote d'Ivoire, Philippines, Peru, etc., and also caters to Sri Lanka, Philippines, Vietnam, Cambodia, Sudan, Myanmar, Mauritius, Costa Rica, Panama, Paraguay, El Salvador, etc., in Latin America. So Zydus, Cadila, Torrent Farm, Intas, Baxter, Merck, USV, Cadila Pharma, Cipla, Indico, Apcot, Ipca. Company has signed an agreement with Zydus Life Science in October 2022 and with Ferring Pharmaceuticals in Feb 2023 to manufacture oncology products. Revenue breakup: sale of products and services 97%. So capex funding: the company is undergoing a capex to set up a plant for oncology injectables funded by new term loans and equity. It raised 62.13 crores from FY17 to FY22 through an IPO and preferential allotment to promoters and non-promoters. Primary for capex, an additional of rupees 34.55 crore was also gathered. So overall market cap 523, current price 238, high 418, low 213, stock P 35, book value 123, ROCE 7.3, has reduced debt, which is the pro. The negatives: company has been reporting profits, no dividend paid, low return on equity of 8.18 in 3 years. Company might be capitalizing the interest cost. Promoter holding has decreased in the last 3 years by 14%. Working capital days have increased from 31 to 62 days. So comparison of the other companies, you can see after Mankind Pharma, it has the highest PE. Second, third in line is Lupin with 30, Sun Pharma 33, Cipla 24. All the others have a PE ratio in range of 18 to 35, and Sakar is also one of them. A market capitalization, if you look, all the other companies have a very high market capitalization of over 65,000 crores, and this company has a market cap of 522 crores. ROCE, I think the lowest ROCE is for Sakar Healthcare. All the others are in range of above 14 and between 14 and 27. Sorry, excuse me. Sales, you can see quarter-on-quarter sales have been more or less the same this financial year. Expenses also in the similar range. Net profit is 4.53 crores. It has dropped slightly from the previous quarter. So you can see here year on year sales have increased, but uh, this year seems to be a little bit better. However, if you look at the overall year on year performance, the net profit has reduced. So that doesn't give a very positive outlook, and that is one of the reasons why the price has recently corrected in the last 1 or 2 months with a drop of 21% due to less revenue and overall net profitability being reduced and not meeting the expectations of the market. So this is something that you can look at. Reserves have increased, borrowings have reduced, so good signs there. However, inventory days have gone up, debtor days have reduced, uh, working capital days have increased due to increase in inventory. Return on capital employed has reduced from 16% in 2020 to 7% in FY24. So promoter holding has been steady. FI is 13.5, DI is almost 11, public 22%. So that is also steady. This is the logo of the company. This is another logo. This is the office of the company. Okay. Here you can see promoter holding sales growth was 14.9%. That was for FY24. This year doesn't seem to be that it is going to match that kind of growth. You can see profit growth of minus 8.53. Then return on capital employed is 7.41. Then you can see here the other comparative companies more like the similar to what Sakar Healthcare is. The other website was showing the top companies in the market. However, these companies are possibly on similar lines to what the company manufactures and produces or markets. So return on capital employed, Vanbury 61, then in Swift Laboratories 55, Albert David 28, Ascent Microcell 30, Medico Remedies 22, then EPS you can see Albert David 70, Kilitech Drugs 15, Indo Swift Lab 61, Bharat Paternals that 40. So there are other good options that are available in the market that you all can look at. So You can please go ahead and do so. Sales have dropped year on year. Overall sales growth was 17.5 and now has come down to 15%. Then profit growth from 11% positive 11% has gone down to minus 8.5 in the last 1 year. Return on capital employed, you can see gradually declining from 11 to 7 in 5 years. This is good. Debt to equity 0.31. This is good. This is very high. Cash flow to the market capitalization of anything above 10 is considered very very high. So this is a concern. Company doesn't generate enough of profit or enough of cash flow to be able to command such a high market capitalization. So there is a further possibility of correction if the revenue and the profit of the company doesn't increase. Interest coverage ratio is very good. This is the graph. We've been through some information already. There is no promoter holding pledged here, so that is a good sign. Company has shown good growth, revenue growth. Okay, company has significantly decreased debt, maintaining effective operating profit margin. Company has shown poor profit growth in last 3 years. Trading at 35 P is also very expensive. So some other positives here, the company has good cash flow, company has high promoter holding of 53%, company has efficient cash conversion cycle of minus 15 days, so which is very good again. Again, quarter to quarter sales, you can see profit after tax has reduced. This is compared to the previous quarter, June to September. Some improvement there, but the last quarter, September to December, has been a poor kind of expectation, not meeting the requirements of the market or expectations. This again is comparing year on year, uh, though that is of the past. Look at the current trends. Doesn't seem that the company is able to meet up the expectations of the past kind of performance that is delivered in the last 2 3 years. So again, this is another comparison between FY22 and FY23. Comparison between FY21 and 22. So you will see there has been a gradual increase, but the last 1 year or the last 9 months haven't been as expected. Reserve, you can see 240 crores, that is an increase. Net of 315 crores blocked in fixed assets. Rest all you can go through. These are the promoter holding details for your reference. Thank you. Thank you for watching. Wish you a great week ahead. And this is one of the latest news available in the market, which you can consider and see if it is worthwhile looking at an investment in this company. For now, it doesn't seem that the company is able to meet the expectations of the market, so there is a possibility of a further correction in the stock price. The next quarter or the financial FY25 result and the quarter earnings for quarter ending March would be the key. So the next result end of April, early May is what you need to look out, which is what will determine the further uh, growth of this company. Thank you.